Hello friends, my name is Atul. Welcome to my channel. I'll be starting a new series, a new training series on international standby practice, which is ISP 98. So one training series is parallelly going on URDG. This is a new series which I have started on ISP. Slowly we'll try to look in simple terms as to how ISP articles are to be interpreted. So if you're new to the channel, please subscribe to my channel and hit the bell icon. Also please share the link of these videos to maximum people so that everyone can be benefited out of these sessions. And lastly, if at the end of the session you like the content, then please press the like button. So let's get started. So basically let's first try to understand why standby came into picture. So before that, we should understand what is the difference between an LC and a guarantee. So suppose we have a transaction A, B are two entities. A is supposed to ship boxes to B and B is supposed to pay money for those boxes. This is a normal simple trade transaction. Now let's see how this will be governed through an LC. If this transaction is to be governed through LC, A is our supplier or exporter, B is our buyer or importer. Okay, now if this transaction is to be governed by LC, then what will happen? The buyer will open the LC. Buyer will go to its bank, buyer will give the request to issue the LC, bank will issue the LC to A. In this case, A will be the beneficiary of LC, B is the applicant of the LC. Now how payment will be triggered in this LC? When A submits credit complying documents to the bank, then bank will release the payment to A if the documents are complying as per the credit terms and conditions. Okay, this is explanation of LC in very simple terms. Now if we have to see how the same transaction can be governed by a guarantee, B will say, boss, I don't know whether you will be able to supply these boxes within stipulated period of time, so you give me a guarantee. In that case, A will go to its bank and bank will issue BG to B. In this case, B is the beneficiary of the BG, A is the applicant of the BG. Same transaction being governed by two different products. Now how this BG, or in what case this BG will be encashed? If A does not perform this obligation. So when A does not perform then B will claim from the bank and bank will make payment. So in case of LC, the trigger point was submission of complying documents to the bank or you can say how compliant documents were presented. Before that, what happened? A did shipment of the boxes as per the contract. So something positive happened, then A submitted the documents and payment was made. Whereas in case of guarantee, what happens is there is a default, there is a non-performance on part of this entity which results in breach of contractual obligations, and then payment under the guarantee, payment mechanism under the guarantee gets triggered. Now, when a bank is issuing a guarantee, bank is in some manner taking a risk on applicant A as to whether applicant A will be performing or not. So bank is thinking that the probability of this applicant to perform would be more, and hence let's get into this transaction. Although this is not the only reason why bank issue guarantees, but one of the underlying behind issuance of a guarantee is bank is assuming, or bank is ready to take risk on this entity. This portion wherein a bank is taking risk on an entity is not allowed in United States. What US says, banks are there to do a particular set of responsibilities wherein those set of responsibilities do not cover you taking a risk on someone else's performance or you taking a call on someone else's performance. So that is why this BG product, which gets triggered because of non-performance of some entity, is not allowed in United States. So United States came up with a product which was midway between LC and BG, which is SBLC, Standby Letter of Credit. Now it has two parts, standby and LC. Standby means, let's go back to the guarantee transaction. Before initiating this claim process, the first act on which beneficiary is relying on applicant's obligation to ship these goods. This is the primary act which beneficiary is expecting out of their contract. So if this act does not happen, then BG is a second option which is there with the beneficiary to recover his dues. So BG is acting as a standby product or as a stepney. So for example, when we have suppose in a four-wheeler we have a fifth tire which is called as a stepney. That stepney is used when any one of those four tires fail to perform. BG is being used as a stepney if this obligation is not performed. So one part is taken from this act wherein you are not performing and I am giving you an instrument to use as a standby or to use as a stepney. So this product is to be used as a standby mechanism to recover the dues of the beneficiary. LC, because this product will be triggered when beneficiary submits complying documents under the SPLC. So since it combines half part from the guarantee mechanism, half part from the LC mechanism, so we have derived a product called as SBLC, standby, because it is not the main mode through which beneficiary should be claiming its dues, because the main act would be applicant performing and then beneficiary making payment. If this does not happen, then beneficiary will use this instrument as a standby. LC, because beneficiary has to submit credit compliant documents to the bank and then get its payment. So SPLC is the product, and this is the difference between an LC and a guarantee. All right, so let's start with article number 1. So article number 1 Okay, before we start with articles, basically the language of ISP is more of a kind of a language of a legal document. The language may look as complex, but what ISP, when ISP was designed, the main motive or the main intention was to prepare a guideline which is very crisp and clear with respect to the obligations of each and every party, how documents are to be scrutinized, in what manner the undertaking has to function, what will be the responsibilities of each and every entity. Everything is mentioned in detail. So let's look at the articles. Now, article number 1 mainly deals with these 4 parts. Okay, first is application. These rules, which is ISP 98. So ISP 98 is the latest version of international standby practices. Application. These rules are intended to be applied to all the standbys mainly, and which includes performance standbys, financial standbys and direct pay standbys. What are these standbys, how they work, that we will deal in later sessions. Next is domestic and international. This undertaking, these rules can be applied to domestic or international undertaking. So what do you mean by domestic or international? If in an undertaking one party is resident in one country and the other party is resident in a different country, then it becomes an international transaction. What is a domestic transaction? When both of the entities are residing in the same country. So these set of rules are applicable on either domestic or international transactions. Standby articles can be modified by explicitly modifying them or by explicitly changing them as per the wordings of the undertaking. So if I have issued an undertaking which is subjected to ISP 98, I can delete or modify any clause. Lastly, standby. Any undertaking which is subjected to ISP 98 will be called as a standby. Any undertaking which is subjected to ISP 98 will be termed as a standby. You will not term it as an LC, you will not term it as a guarantee, you will call it as standby letter of credit or SBLC. So we just now saw article 1.01. let's move on to 1.02. next is 1.02. so we have an example. A gives the request to bank to issue SBLC to B, B being the beneficiary, A being the applicant. Now this SBLC is subjected to the laws of beneficiary's country, which is X. Alright, now this country has a regulation or has a requirement that any SBLC which is issued to beneficiary residing in this country, if that beneficiary wants to lodge a claim, if that beneficiary wants to claim under the SBLC, beneficiary has to present tax invoice. Now this is the requirement as per local law. SBLC says you have to just present a demand or a claim letter. Since this is the requirement additionally required as per applicable law, these two documents will be by default required under the SBLC. These rules supplement the applicable law till the time the applicable law is not conflicting. If the applicable law conflicts, then law prevails. Alright, if there are conflicting terms between ISP and local law which is applicable on the undertaking, then law will supersede ISP. Next part is related to conflicting provisions. Now if this SBLC is subjected to ISP 98 and UCP 600, then ISP 98 will prevail if any clause conflicts between the provisions of ISP and UCP. This logic is also applied if the same undertaking is subjected to URDG 758. If there are any conflicting provisions between URDG and ISP, then ISP will prevail. ISP will supersede any other undertaking to which this undertaking, any other rules to which this undertaking is subjected to, and whatever is mentioned in ISP, that will prevail in case of any conflict. Alright, next is 1.03. 1.03 basically stresses upon the fact that this undertaking or these rules should be used for trade finance transactions. These rules will be used uniformly across the globe in any undertaking which is subjected to these rules. Also, when undertaking is subjected to ISP, it becomes a more reliable and efficient undertaking which can be consistently used for processing of trade finance transactions. Alright, moving to 1.04. So what 1.04 says is these rules will be acting as terms and conditions and will be acting as an integral part of the undertaking. So like any undertaking, say LC or a guarantee, if the LC is subjected to UCP, LC will be having its own terms and conditions. The terms and conditions imposed or implied by UCP will automatically get added into the LC undertaking. Similarly, these rules, which is ISP 98, will be acting as an integral part of terms and conditions of the undertaking unless these rules are expressly modified, and they will be applied on all the entities acting in their respective capacities in that manner. So whatever are the obligations of issuer, beneficiary, advisor, confirmer, nominated person or applicant, they will be binded by these rules as per their capacity or as per their role in this undertaking. Okay, so these rules will act as an integral part of terms and conditions, and they will be applied in respective capacities under agreement of all these parties. Okay, only for beneficiary these rules will be applied to the extent beneficiary is utilizing the services of SBLC. So for example, if an SBLC is amended, the SBLC was initially issued for say $10,000. Now the amount is reduced to $5,000. Unless and until either beneficiary gives an explicit acceptance of this reduction, or unless and until beneficiary gives an indication that this amendment is accepted, it will deemed to be undecisive in nature whether this amendment is accepted or not. So for beneficiary, a standby will only be effective, or a standby will only bind the beneficiary to the extent beneficiary is utilizing that standby. Okay, and for all other entities they will be binded in their respective capacities by these rules. Okay, in the previous article, which was 1.04, we saw a few terms. So let's look in brief what those terms mean. First was applicant. Applicant is the entity who gives the application to issue a standby. Beneficiary, the receiver of the standby who is allowed to present documents under the standby. Issuer is the bank or the entity which is issuing the standby. Then comes confirmer. A standby can be confirmed like an LC. Like a bank adds confirmation to the LC, similarly bank can add confirmation to the standby. So in that case, once a standby is confirmed, the confirmer comes into the shoes of the issuer. Beneficiary can submit documents to the confirmer and get the payment. Okay, then comes nominated person. Nominated person or nominated bank, if we compare it in terms of LC, will have the same set of responsibilities. A nominated person is a entity which is nominated by the issuer to act in a certain manner in that SBLC undertaking. So nominated person can also be a bank which is allowed to receive the documents from the beneficiary and courier it to the issuer. Alright, so applicant, beneficiary, issuer, confirmer, nominated person. Last one is advisor. Advisor is basically the advising bank which has given the undertaking to the beneficiary. Advising bank has only two responsibilities: to check whether the undertaking is authentic and whatever is received is given to the beneficiary. Next is 1.05. 1.05 tells us about three things. First is authority, and the last one is these guidelines do not tell you whether you are authorized to issue a SBLC or not. They are just designed to simplify an undertaking, to simplify that particular trade finance transaction. That doesn't mean they give or they decide whether an entity or whether a company or whether a bank is authorized to issue this undertaking or not. Second is execution. These guidelines do not tell you how to execute or how to word your undertaking. These are the separate set of rules which, if applied to the undertaking, will help in simplifying the interpretation of the clauses, but they will not tell you how to frame the basic clauses of the undertaking. Lastly, fraud. If some fraud happens, these rules will not tell you how to deal with it. So whether you are authorized to issue undertaking subjected to ISP, how to execute that, or if any fraud happens, then what to do. For all these things, you go to your applicable law. I am not telling you how to deal with all these issues. I am here, or ISP is there to simplify trade finance transaction, not to tell you whether you are authorized to issue an undertaking, not to tell you what to write in the basic terms and conditions of the undertaking, or not to tell you or not to give you a guideline how to deal with any fraudulent kind of situation. You go to your applicable law to deal with such kind of situations. Okay, so all right friends, we will hold our training session over here. We have covered from 1.01 to 1.05. Hope you have hope this session would have helped you in getting a basic knowledge about how ISP is to be interpreted. If you like the training content, then please press the like button. Have a great day. Thank you.